Hi everybody, my name is Alexander Alexandrov and this is my final project for CIS 3367 with Professor Wheeler. In one of the last classes we did a financial model and I was really impressed of what we can achieve with Excel, and I figure why don't I do an individual income tax model, because we know it's end of the year, tax season comes and it's touching everybody. As we know, only tax and debt are for sure. So here we go. We can start with the client names, and what it's more important is if they're blind or their age, because based on this we'll get something called additional standard deduction, and it's usually getting entered into the system or the model right at the beginning as you interview the taxpayers. And here we have a formula that can calculate it based on the entries. If let's say here was no, well, or here he was 23 years old, we only have now one person who is in total entitled to additional standard deduction. And that's important because the amounts are different for the standard deduction with or without these values. Next, what's really important when you file your taxes is your filing status. Based on it, there are different tax rates and different standard deductions. So I've inserted control here, and so let's say that we're married filing jointly couple, but you can change it to here. As you see, the value changes. I'll put it back on 2. Then we have some dependents. Obviously, if we're, let's say we're 65, we have kids, 2 types of dependents, qualifying child and relative. This is also important because it gives us a tax credit in the end, and credits are dollar for dollar against tax owed, so we want to have these. And then we'll start with calculating our income for the year. We had some W2, which we know our employer gives us at the end of the year, and with it, it tells us what were the total withholdings um, uh, for the year. And let's say here were 4,000, and we will run a goal seek analysis on this. As we know, everybody wants a refund at the end of the year, or doesn't want to owe money. So let's see how that goes with these amounts. And a bunch of other incomes from interest accounts or from dividends accounts. We also have, let's say, a small business, e-commerce, very popular now. Even if you work on a payroll, do something from home and sell it on Amazon, we accumulated some small net income. We also have invested money, that's called Schedule D, or capital gain and losses, and here the calculations are important. If the previous year we had a net loss of more than 3,000, we are only entitled to offset the ordinary income with 3,000. So in this case, if we had 12,000 previous year, it gets carried over to next year, and then our net amount for 2019 it takes it into consideration again. If we are over 3,000 on minus, we have a loss. We can only offset 3,000. So this is that formula. If we were, let's say, not on minus, but we had $80,000, so now we're on plus, and that gets added to our income. But for the purpose of this, let's leave it at 2,100 to make sure that the formula works. And just a quick disclaimer, capital gain tax sometimes align with our individual tax rates, sometimes they don't. For the purpose of this exercise, we're assuming that they're aligned. Quick calculation for gross income because we'll need it below. Then once we have our gross income, there are certain deductions from it that, or for it, called deductions for AGI or deductions from AGI, that are reducing our taxable income. And let's say that we have a retirement account, this reduces our taxable income. We have health savings account, everyone should have. If it doesn't have a employer provided insurance, and also because we are self-employed, we are entitled to a small deduction. We're not going into that also now. That's our total deductions for AGI. Now our AGI after this adjustment is less. It's 127,000 instead of 136. Then we come to deductions from AGI. And here we have the option to choose the largest deduction between the itemized deductions and standard deductions. Standard deductions are set by the government and they're based on your filing status and if you are blind or over 65, then the amounts are different. Itemized deductions, also some expenses are allowed to be deducted, but they're limited. Let's say for medical expenses, if they don't exceed 7.5% of our income of AGI, we're not entitled to do it. That's why here is 0. Here is the formula for it. But if we, let's say we had 20,000, then we're allowed to deduct the amount that exceeds the 7.5% of AGI. Also, another limitation is state income tax and real estate tax together cannot exceed 10,000. So let's say we paid state income taxes 7,000 and something and 3,000 for real estate taxes. If we own a house, then our total itemized deduction is 10,000. Let's say even if this was 15,000, we will still 10,000 allowed to deduct. Mortgage interest, it's plain, and then with some contributions, then this is our amount. Now, as I said, we're allowed to elect between our total standard deduction. Here is the calculation for it. I know it's a little bit a long formula. And we can take the larger of these two amounts. And with this, we are going to our federal tax form. These amounts here are all carried over from above. We come here and for deduction, grade of itemized or standard, and we've used max formula. And after all of the calculations, we have our taxable income. That's our tax. Now, how is this calculated? As you see, it comes from another workbook, and we have these tables here. Initially, I took the table from IRS website, and then what I did is, let's say I wanted to work with it instead of a text, so I had to do something like that. I'll show you something tricky because you need the numbers to be in a separate cell. So we use text to columns, and we can say delimited and that they're deleted by space. And next, and let's say that we want them to be not in E3 but in F3 to start. Hop, and now we can work with this much easier. So I've created a few macros for this, and I have all of the tables. That was the trickiest part for the project, because once you have the income, it's so hard to fall in one of these categories. And initially I had like 3 lines of if statement, and I always would do a mistake. Then I figured, you know what, why don't I do separate tables, create one formula, and then use a VBA code for it and just change the value of 1 here for filing status, and here change the value 2, here 3, and so on. And then I'll just sum this, because it will fall only in one of these, right? So for example, if I go back, now it's in 2 because we have status 2 here. But if I go back and if I change the type of status to 3, okay, so now we are in table number 3. I'm summing this and it gives me the total tax due, which in turn is carried over in our federal form 1040. But for the purpose of the exercise, I'll change this back to 2. Okay, and so we arrive after the credits that I mentioned above with this formula, we're calculating them. We have our total tax, and then based on our withholdings, we see that we owe money to the government. So for next year, if we have similar expenses, we want to avoid it. We want to even break even or get a refund, or depend on our goal. For the purpose, I've also conditional formatted the cell where it indicates that we owe. If it would have been green, it would that means that we owe a refund. And for this, I'll run. I want next year to be 0, so I'll run a goal seek. I want the cell value to be 0, and I want to change the withholdings. It looks like the taxpayer, not the spouse, withholded too little. So let's see how much they should have been withholded in total. So instead of 4,000, it's so for the difference we can tell our HR that we want additional withholdings based on your weekly or bi-weekly payroll. You can calculate that. And that was all for me. Thank you.